Hey traders, happy Monday. Welcome to another episode of Charts and Coffee. All right, great to see you guys as we wind down this month of March. It should be an interesting one. So as always, let's go ahead and get those questions in there. Thanks always for being part of our Charts and Coffee crew. All right, so a couple things to remember about as we wind down March. One, there tends to be redemptions at the end of a month. That's just a typical cycle. It's a tendency. It's not a setup. We still have sort of maybe hanging over our heads collectively this idea of the rebalancing that we're expected to see because of what's been happening with the 10-year. Again, it's not just the trend. It's also the yield, right? What would higher yields in the 10-year compete with? Typically, your sort of blue chip, your dividend yielding, aristocrat, dividend kings, that kind of thing. The other thing to keep in mind as we kick off the morning is we had a spectacular Friday, right? The way in which the Friday closed. And I really tried to temper the move. In fact, keep this in mind, and we'll get into the Q&A. When the market sells off, what does everyone say? What do you hear? It's the algos, or it's the systems, or it's the HF, whatever I just call it Skynet, whatever Skynet is. When I was a brand new trader and I had to route all my trades to the pits, it was always the pits, right? The pits were the ones getting you. All right. Then the pits turned into systems trades. Oh, the systems. It was a big thing in the 90s, you might remember. So pits in the 80s, systems in the 90s, then became high frequency. What's the new name for Skynet? Now it's algos, which is really just a mathematical way in which people are executing now on the back of high frequency. When the market moves lower, it's the algos, right? As if it diminishes the fact that price is moving lower. But isn't it funny? No one's screaming about the algos going, well, be equally hesitant when the market moves up. So keep that in mind. And what we're seeing on the NAS and what we're seeing on the S&P is, likely what was a dramatic and it's clearly strong Friday close, taking a breather up near the overbought levels of chop. Because at the end of the day, gang, this market is still very, very choppy. Let me load up. What layout am I on here? There we go. Let's get in our wave layout. So I hope that helps. I hope that makes sense. I hope that adds a little bit of texture to what was probably made way too much of that end of day Friday. I'm not here to throw cold water on anybody. Just remember that we're in chop, all right? And the markets really didn't go anywhere significant in terms of swing highs on Friday's rally. Okay, so let's get to it. Good morning, good morning. All right, first question. Hey there, Weebill. Do you use Fibonacci retracements to measure pullbacks into a double green? I do. I do like Fibonacci very much. It's a mathematical law of nature, not just some mere trading tool. It's an incredibly powerful mathematical law. However, I do think it takes some time to learn to use quickly and accurately, and it's highly subjective, not because they don't yield good levels, but because the skill required to learn to use them, right? To get that skill behind and the confidence behind the Fibonacci pull that you may use takes some time. I tend not to really teach it a lot because it does take practice and you've got to train your eyes. So I will sometimes look at a last major move as unretraced as possible. And if I can get the wave and price action sync up somewhere between the 382 and the 618 Fibonacci, that would be terrific. Early in my career, first few years, I used a couple simple patterns and 50% retracements, and they work. I mean, no doubt about it. They work really, really well. So the answer is yes, but I don't do too much deep diving into it because of the subjectivity in terms of the learning curve. Am I interested in buying Viacom? So Viacom's been one of those names that's been a leader within XLC. All right. So XLC got drugged down by Facebook. XLC clearly is going to be affected by what's going on in Viacom. But let's talk about this move in Viacom briefly. So first of all, we end up with a gap into the 21. right? And then we end up with a move that, and this is really important, gang, because this is what's going to take subjective analysis and turn it objective. We use historical volatility to say, is this a normal candle? You can look, just even if you did not understand the context of historical volatility, you can definitely look at that move and say, yeah, there's something really abnormal about it. Let me do a little fishing around. Let me find out what's going on. Why are the sellers so, vehemently driving this price down? What's the exodus all about? So when that happens, you're usually looking for, and I've talked about this in Charts and Coffee many times, if you're in the Sector Secrets Mastery, if you're in the Simpler Futures room, I've talked about this as well. We wait for that pause pattern. It's a simple pattern. It's either a minor low or an inside day, and neither really formed after that big sell-off. So until I get a candle that shows us the market's willing to pause, down here we have an interesting volume ledge. See a little ledge of volume right there, and the 200 EMA, but I still need that pause candle because that candle from Friday was even crazier than the one that started the whole break of the trend to begin with. So I have no interest in it until I get that pattern. So I hope that makes sense. And thanks for the question. I'm sure you're not the only one wondering about, what to do with that. All right. Do I have thoughts on, hey there, Vish, do I have thoughts on banks with a block trade news? Not really. I mean, I don't know specifically what you think is, what's the play there, but not really. I mean, look, there's always something like that is going to influence the market. I'll view it through the perspective of the current trend and the current volatility. Home Depot and IBM on a pullback, Perez. So Home Depot, I don't actually have a lot that I can do with this because the way in which it's moved higher. This is kind of part and parcel with the way in which I viewed, and not just recently, we've talked about, in fact, I was having dinner last night. And one of the things we were talking about over dinner, because this is what a market geek I am, but luckily it was reciprocated, is what's going on with home building, what's going on with what I think is going to be a lot more demand. You're already seeing it at the existing homes level in terms of price, and it's going to hit the new homes, new home starts, building permits. You're going to see more demand for homes and not enough supply. And so you're already seeing ITB, XHB, Lowe's, Home Depot starting to make a move. Yeah, definitely on a pullback, but there might be some other names, Perez, that are a little less Dow dependent, a little less Dow exposed, and would be, I think, a much more direct play on that home building bullishness that we've been in, right? I think at the end of February, I think it was the end of February, 25th, 26th, we got into Toll, we got into KBH. I've been bullish at XHB, ITB. Take a look at that part of the market. All right, IBM. Look, I'm kind of biased. IBM was the first stock I ever owned. They were the first covered calls I've ever written. Yeah, pullback buy is fine, but I'll tell you what, I very seldom play IBM anymore, quite frankly. So I wouldn't say it's something that I typically look at for a read. Hey there, Trisha. Any thoughts on Archigo's fallout? Archigo's fallout. I guess I should look at these questions a little bit more before I post them. You're talking about the Archigos. Oh, the hedge fund. No. I mean, we're going to have the same kind of issues with unwinds. But no, not at the moment. I think here's a really good play on news. If it's news and you want to know how the news is being spun, that's where some financial television is going to be helpful. The holdings, the 13Fs will be the best, most recent look at what they are holding, the most recent 13F. And after that, I've just got to look at price action, right? That's all I can do, right? That's all I can do at that point. CORN, and I don't know a lot about that narrative. It hasn't been something that necessarily has been pinging on my radar in any significant way. It's really going to depend on what they hold and what they have to unwind. And I'll have to look in terms of what they're liquidating, right? That's how little it's really been an impact on my trading. But yeah, you always want to know what has to be liquidated or what will be liquidated, Sure. And they're not going to let anybody know because clearly they want to do so as stealthily as possible. So the only thing, like I said, we've got their footprints on are the 13Fs. Corn. I like corn a lot. Pravish, it's really probably turning into not just a daily play for me, but a longer term weekly play for me. So I do want to be very clear about the trend, time frame, and time horizon. I am very, very bullish in terms of the reflation trade at the grocery store commodity level. So yes, still very, very bullish on corn. And I think, yeah, it's still in a zone that you can enter at. To your question, absolutely. All right. Next question is, how do I read the big divergence in SPY and QQQ? I don't look at divergence. I know, Christine, I don't look at divergence. So in other words, an indicator moving like this, well, the stuff, it's just another way of using an indicator. It doesn't mean that it's not helpful, but I don't look at divergence because if I start looking at divergence at SPY and QQQ, actually, here's a really good way to tell you how I look at this tactically, and frankly, better than divergence. What's going on in SPY is really a conversation about the S&P futures, which trade 24 hours. You're going to have a better, more global opinion being factored into price. 2, SPY is this giant collection of 500 stocks, different sectors, different weightings. This goes back to the conversation that we were having sort of earlier regarding, we've had this many, many times regarding knowing the stocks and knowing the sectors in the index. So when you look at why an index moves, don't always stick with that broad opinion, especially when the market's in chop. Why is S&P more resilient than the NAS? Because the sectors that are heavily weighted within the S&P are more resilient. Why is the Dow doing better than the NAS and the S&P and the Russell? Because again, the sectors that are heavily weighted within it, from industrials to transports to, you can throw XLF and XLE, the financials and energies in there, they are outperforming. So I think that's a dangerous, tricky, and very misleading way to again, I'm trying to show you guys a way that you can take the sectors that are heavily weighted within the indices and then have a better idea of what's really going on rather than, and I don't use divergence, so I'm probably the worst person to ask. I don't find it necessarily all that helpful. It's reading at an indicator level, which is oftentimes a very superficial level. So don't get mad at me if you use divergence. If you're using it, great, fantastic. Add what I just showed you, and you're really going to have a fantastic 1-2 punch. Okay. All right. Hey there, Mike. Will FCX be on the radar? Probably not. Copper still is for me, but Freeport-McMoRan got very ugly. So I'm going to have to see where the volume ultimately gives us a good little ledge to hang on to. And the pattern that we have here is somewhat interesting, but this is a choppy market now. We saw this chop accompanying earnings, which I did not mind because we knew why the catalyst for increased volatility appeared. This time, not as clear. So I do have the long play on copper. Freeport-McMoRan simply a proxy for that. So I still like long HG for my futures traders out there, but I'll be a little bit more hesitant on Freeport-McMoRan. In fact, Mike, one of the things that we'll be doing this week, and we will have we have our weekly Q&A in the Sector Secrets Mastery between 3 and 4 p.m. Eastern today. So if you want to check out what we do, you can do so over at simplertrading.com/sector. One of the things we're going to be doing is really rebuilding the watch list, really stepping back and saying, okay, we know what's worked the last month. I mean, frankly, the last month has been our best month this year. And we did not suffer the same type of volatility that, the entire marketplace has been seeing at the end of January, at the end of February. Those are awful. I mean, for the most part, that book of trades has been, more or less pretty steady, but not really making a lot of headway. And this month, we definitely broke through. Why? Because we changed the way we were building out our watch list. We changed what we were actually looking at and why, and redirected it to more of a reflationary watch list building process. So I'm going to continue on with that this week. So you're going to notice as we go into April, there are some names that we may not carry along with us. Freeport-McMoRan might be one of them, but there are a whole host of other sectors, aforementioned home builders, that are going to start to be added into the mix. We have OPEC coming up, so clearly we've got oil stocks and oil itself, as well as gasoline in the mix. So you're going to see me rebuild that watch list, and we're going to shift our focus a little bit from the things that were really good in February, but don't look as good now. So, I mean, we went, 16, 17 for 19 trades in the last month, not because the markets have been going straight up, because let's face it, anyone can trade that. We're going to reshift our watch list. And I think that shift this week is going to be really important. So thank you for the question about Freeport-McMoRan. It's definitely one that is probably going to be left behind as we move forward, at least for a little while. Okay, so, oh yes, and by the way, to learn more about the mastery, I mentioned the URL before, simpletrading.com/sector. The next live session, that watch list building session, is going to be today at 3 p.m. Eastern. All right, next up, are we going to see margin calls in terms of the, kind of going back to Trisha's question, Arlen? Possibly. Yeah, I'm not ruling it out. I'm just looking right now in the way that the names that I've been focused on are moving. And if there's going to be some influence, I'll do a little bit more digging. But right now, yeah, of course. I mean, that's a great point. Bevan asked, am I doing the first hour in the futures room this morning? Bevan, I'll be doing the first, we do from 9:20 to, oh, that's a really good reminder. Thank you, Bevan. If you're logged into the Simpler Trading YouTube channel, or maybe you're however you're logged in, this dual broadcasts on my YouTube channel, the Simpler YouTube channel, the Facebook. So if you're on one of the YouTubes at 9:20, in about 3 minutes here, I'm going to be flipping over to our Simpler Futures room, and I'm going to be doing our typical future scanning and day trading, and even scanning for some swing setups this morning, as we do every morning. And so today it will be broadcast for free in the Simpler Trading YouTube channel. So you can check that out. Join me if you'd like for the next, if you got the time, right? It's going to be 9:20 to 11:30 or so. And if you can't join all of it live, no worries. It is going to be recorded, and it's going to be hosted on the Simpler Trading YouTube page. So yes, I will be in there from 9:20 to 11:30 for our Monday live broadcast, free live broadcast. You can see a little bit more about with what I do with the day trades, right? Not really a big conversation here in the morning, but you can see what I do with the clearing range and initial balance ranges and patterns and all that kind of stuff. So thank you for the question, Bevan. Great reminder. So let's see. Viacom tanked because of the, so let me go back to this bit, gang. What I'm going to, again, bring up is we don't know what is going to be impacted until after, right? So let's all assume that news about the hedge fund, a surprise. Unless you're following their 13Fs really closely, Viacom is not going to be the first place we go to. Again, it's going to be after the fact. So what I'm trying to say here is, let's say you're a hermit in a cave and you've got no idea about some hedge fund imploding, liquidating their positions, and the degree to which Viacom was hit. And let's assume that's going to be most of the time, because frankly, gang, we're not getting the news before everybody else, right? So that candle was a larger than normal candle, right? That alone should get you to pause. So just keep in mind that we're not going to be at the forefront of the news cycle at all. We're not going to be at the forefront of the why, usually. We're going to have to interpret and extrapolate from what we have, which is usually price, and then very, very delayed news. Because by the time the news hits on something like this, the gap down in the movement's already happening. But what you do have is the ability to look at the historical volatility compared to what we've seen before and say, I may not know the news yet. I may not know the why now, but that candle, that gap, this particular market moving in the exact opposite way of the XLC, where it is relatively weighted heavily, is unusual. And that should cause me to pause. And I should wait for one of those pause and potentially reversal patterns. Okay, so I hope that helps. I think this thinking that somehow we're going to be able to act like the insiders sort of do, it's just going to get us in trouble. So there's your doji Minor low started, but didn't complete. And that wasn't an inside day. So let what the news does is discount what is known about a stock, about a market, about a sector, whatever. And right now, what's known is still pretty treacherous for me. I'm not going to step into something like that. All right. The size of the candle relative to historical volatility really should be the heads up. Okay. So just keep in mind, again, you're not going to be at the forefront of that news cycle. I don't care what service you pay for. So use the price action to protect yourself and be wary of stuff like this. Gang, there's so much in the market that's working well right now. I really wouldn't pay that much attention to Viacom, to VIAC. All right. So with that being said, I've got to go switch over to the Daytrade. Just jump on over there. Join me there in a moment. I will see you all tomorrow for our very next episode of Charts and Coffee. Be good to each other, gang.